Something happened recently in a group of my friends, which is why I'm making this video today. If you have dependents, someone who relies on you financially, or you are the main breadwinner of the family, you need to listen to this, what I'm about to share. Hi guys, this is Nafte Jalwalia, and let me tell you what happened. Kevin, he recently passed away at the age of 44, leaving behind his kids, wife, plus a house with a mortgage. Now the distress his partner is going through is beyond anyone can imagine. On top of that, she is going through a financial stress as well. Therefore, it is very important for some of us to have life insurance. Let's talk about what life insurance is and who should have it. The sole purpose of life insurance is to replace your income in the event of your death. If your spouse or children depends on your income, you do need life insurance. Now, I do not advise purchasing a whole life insurance since companies pair a life insurance policy along with a poorly performing investment strategy, and return on this investment strategy is nowhere near what an index fund can give you. Instead, I would get a term life insurance policy, which is 10 to 12 times my annual income. Term life insurance policy are valid for a specified period, often 10 to 20 years. However, after the term expires, you won't have to worry about life insurance if you use those 10 to 20 years of hard work and accumulate wealth, because at that point, your hard work would have made you self insured, meaning that even in the unlikely event of your death, your family will have secured financial future, assuming you have paid off your house and accumulated wealth. Let me give you an example of term life insurance. George, who is 33-year-old, wants to protect his family in an unlikely event that he dies too soon. He purchases a 20-year $1 million term life insurance policy for $100 per month. If George dies during the 20 years, his beneficiary will receive $1 million from the policy. If George dies after the policy expires, his beneficiary will not receive any money. He can always renew the policy after 20 years, but the premium will be higher than his first coverage because the premium will be based on his current age of 53 rather than 33. Now the question comes to mind, when should I stop the policy? Now there are two events where you don't have to take life insurance policy or you should stop a policy. First event, if your dependent is no longer relying on you for financial support. Second scenario, if you have investment property, mutual funds, or a lump sum money to take care of their financial obligations. Let's discuss some other important types of insurance, so you will be ready to decide what is best for you and your family. Let's talk about health insurance. What if you are diagnosed with cancer and you will need weeks, if not months, of treatment? If you wish to receive surgery right now and avoid having to wait months in line for public health services, that is the very reason you should have a health insurance. Check that your family has the coverage that's needed from your health insurance policy. It may require some digging to know which plan is the best for you, but it is your first line of defense in the event of a medical emergency. There are a few things you can do to lower the cost of your health insurance if you are concerned about it. For example, many people obtain their health insurance through their employer or the employer of their spouse. And when should you stop this policy? Never. You should never stop your health insurance policy. Let's talk about car insurance. After our house, our car might be the most expensive possession we have. Replacing it once it is stolen or get destroyed in an accident can be extremely expensive. If these things happen, our car insurance policy will cover the cost of replacing or repairing our car. The most popular type of insurance is comprehensive, which protect us against theft, loss, and damage caused to our car, plus against unintentional harm to other person's car or property we destroyed. It can be tempting to skip car insurance to save money if we have a cheap car. Never do this mistake because we are still liable to pay for the damages caused to other person's car or property if we are at fault. You can always get a third party coverage for cheaper option. Damage to the other person's car or property is covered by third party insurance, but we will have to fix our own car at our own expense. The risk of our car being stolen or destroyed in fire is also covered by third party coverage. Our age, past insurance claims, the amount of excess we are willing to accept, the model number, and the brand of car will all affect how much car insurance costs. And when should you stop this policy? You can stop this policy if you stop driving. Let's talk about home insurance. If you have a mortgage, you must get home insurance since your lender needs it to protect the investment. Your possession and your house are covered by home insurance policy, along with the temporary accommodation for your family. Depending upon the kind of home insurance you have and the type of property you own, your coverage will differ. And when should you stop this policy? Whenever you sell your house. Let's talk about travel insurance. Getting travel insurance is a smart move while taking an international vacation. Travel insurance protects personal belongings from theft or loss. Additional expenses in the event of cancelled flight and medical care in the event of accident and illness is also covered. Traveling without a travel insurance carries out a significant financial risk because medical care can be very expensive in some of the countries. Check the fine print. There are fine print exclusions on all insurance policies. They frequently contain exclusions for pre existing conditions. These policies can be difficult to understand. In addition to help you file claim, a broker can explain these insurance policies better. So make sure you read the fine print before you buy a policy. Now there are some insurance policies which you don't need. Let's talk about them. Accidental death insurance. Life insurance pays out in event of your death. Purchasing a life insurance policy is a more sensible choice than expanding your list of insurance coverage with an additional policy. Number 2, kids life insurance. The purpose of life insurance policy is to give your dependent a safety net. Kids life insurance policy is not required because children have no dependents. Rather, fund an educational plan for your kids for the same amount of money you would rather buy a life insurance for. Next is mortgage life insurance. The fund received from a solid life insurance policy is enough to pay off your mortgage and any other debt you may have. So, an additional mortgage life insurance policy is not required. Unemployment insurance. If you are unemployed, this insurance will pay the minimum amount due on your bills, which seems like a good deal. Instead, it would be wiser to put money aside and create an emergency fund. Remember this: insurance is not a savings or investment plan. Rather, it is about shifting risk which you are unable to manage on your own. Insurance is meant to serve as a safety net for your finances in an event which can bankrupt you if you don't have a good insurance policy. Using insurance as a saving or an investment plan is not a good idea. Alright guys, that's all for today. I hope after watching this video, you can provide a better safety net for your family and your finances. And I will see you soon with another one next Sunday. Until then, goodbye.